From growth to gloom, Australia's pink hot belongings marketplace hits opposite Sydney this April. Australian domestic repairman Rhys Sake positioned his mother and father residents available on the market in Melbourne's outskirts, with hopes of a quick sale so they may flow in the direction of family and health offerings. But 6 weeks and 2 interest price hikes later, he withdrew the listing after receiving no offers, in spite of a 10% reduction within the asking fee from what were a mean quantity for similar houses inside the region. It turned into simply nothing in any respect, Sake, 45, instructed by means of telephone. I changed into in reality losing my cool. His experience reflects a fast reversal in Australia's $2 trillion Australian dollars, $1.40 trillion housing market which, after surging through the pandemic, has entered what many economists say is a downturn because of competitive charge hikes from an important financial institution determined to squash runaway inflation. Pandemic-related savings and stimulus bills helped push up house expenditures nationwide via a quarter in 2021 alone. But now, little more than one-half of the homes being auctioned are promoting in maximum major cities, down from 3/4 as currently as March. Property expenditures in Sydney, the arena's second most steeply priced housing market after Hong Kong by means of some measures, have fallen 4.7% since April, in step with CoreLogic, the quickest decline in many years. The increase was made feasible by way of a shift from very high interest charges 30 years ago to currently very low interest fees, and that is now being reversed, mentioned OTC, AMLTF, chief economist Shane Oliver, who expects residents' expenditures to drop 15% to 20% from the peak of early 2022 to 2024. With the Australian authorities' caution inflation has but to top, most economists expect extra price hikes in coming months, the following as anticipated on Tuesday. Seller stress: sellers are dealing with more than one headwinds, from opposition to souring buyer sentiment. Since homeowners generally favor promoting in spring, a surge of listings next month may additionally upload to the strain, economists say. Meanwhile, after deferring mortgage payments from pandemic-impacted homeowners, creditors have resumed mortgage enforcement, pastime like submitting for repossession from human beings in default, in line with court docket facts. In the first 6 months of 2022, assets repossession filings in Australia's 3 maximum populous states totaled 997, up 56% from a 12 months in advance. That changed into nonetheless properly under pre-pandemic tiers, however, alerts mortgage stress, borrower advocates stated. There are letters of call for being issued, particularly from the second and third tier creditors, said Claude Von Arx, a economic counselor at the Consumer Action Law Center. SQM Research said assets commercials with phrases like mortgagee in possession or financial institution pressured sale hit a file low of 5,500 in April, the month earlier than costs began rising, from about 15,000 pre-pandemic. By mid-July, the number had risen 10%. We're in a brand new environment where we have got growing hobby quotes and we not have the ones banking moratoriums, so our expectation is that the ones numbers are going to significantly rise and at the least get back to where we have been prior to COVID, stated SQM Managing Director Lewis Christopher. People dealing with forced sales or eviction now make up 1/4 of the caseload at Mortgage Stress Victoria, a carrier for people struggling with payments, from 5% in early 2022, stated Felony Director Matthew Martin. The Big Four banks Commonwealth Bank of Australia (OTC), CMWAY, National Australia Bank (OTC), NABZY Limited, Westpac Banking (NYSE), WBK Corp and Australia and New Zealand Banking Group Limited stated that they had now not skilled a upward push in mortgage enforcement, a signal the exchange is being pushed by using non-bank and subprime lenders which lend to riskier clients for higher charges that have 1/4 of the marketplace. Australian Banking Association CEO Anna Bligh mentioned repossessions remained at an all-time low due to a decade of tasks to guide customers in hassle, and long-run facts developments must always be taken into consideration alongside any shorter snapshots. $1 equals 1.4325 Australian bucks.